Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 26th of June. The Canadian dollar took a hit on Friday following the release of Canada's CPI figures for May. Both the headline and the core rates declined notably, with the core falling for the third consecutive month and reaching its lowest level since 2011. The soft readings probably poured cold water on recent speculation regarding a more hawkish stance by the Bank of Canada soon, which arose after Deputy Governor Wilkins noted that the bank will assess whether all the monetary stimulus currently in place is still needed. Having said that, though, we remain somewhat optimistic on the Loonie's short-term outlook despite slowing inflation. Canada's broader economy remains solid as the labour market continues to tighten, while there are signs that Q2 GDP growth may be stronger than previously expected. In addition, there is the prospect for a rebound in oil prices following several weeks of declines and rising political tensions in the Middle East between Saudi Arabia and Qatar, which increase the risk of supply disruptions in the near future. Dollar cut edged north on Friday after the slide in Canada's inflation rates. The pair rebounded from the lower bound of the flag formation that has been containing the price action since the 14th of June, so we prefer to stay neutral for now. However, given that the rate is still trading below the downtrend line taken from the peak of the 11th of May, we believe that the prevailing short-term trend remains cautiously to the downside. A clear break below the crossroad of 132.10 and the lower bound of the flag could signal the continuation of that trend and could initially aim for our next support of 131.60, marked by the low of the 14th of June. Another dip below the latter level will confirm a forthcoming lower low and may open the way for the 130.80 obstacle, a support defined by the low of the 27th of February. Now, as for today's highlights, during the European Day we get Germany's IFO survey for June. Expectations are for an uptick in the current conditions index and a downtick in the expectations figure. Nonetheless, even if the expectations index comes down slightly, we don't expect that to be particularly worrisome for ECB policymakers, considering that the composite IFO index reached a fresh all-time high in May. In the US, durable goods orders for May are coming out. The forecast is for headline orders to have fallen again, but at a slower pace than previously, while the core rate that excludes transportation equipment is expected to have turned positive. The new orders sub-index of the ISM manufacturing PMI showed a rebound in the month, which supports the core forecast. We believe that investors may focus primarily on the core print, which excludes volatile items. Thus, a potential rebound in the core orders may bring the greenback under renewed buying interest. Dollar yen has been trading in a quiet mode since the 22nd of June, staying between the 111 and 111.45 barriers. However, despite the recent trendless action, the rate continues to trade above the prior downtrend line drawn from the peak of the 10th of May. Therefore, we remain cautiously optimistic on the pair, and we expect the bulls to take the reins again soon. A break above 111.45 could target the 111.75 hurdle first. Another break above 111.75 could set the stage for the 112.15 zone. Now, as for the rest of the week, on Tuesday, the only event that could attract some attention is a speech by Fed Chair Yellen that will focus on global economic issues. On Wednesday, we have a relatively quiet day with nothing major on the agenda, while on Thursday, the UK Parliament is expected to vote on the Queen's speech. We think that the vote could keep investors on the edge of their seats, as it will determine whether Theresa May will keep her position as the UK Prime Minister. As for the economic indicators, we get Germany's preliminary CPI data for June. Finally, on Friday, during the Asian morning, we get Japan's CPI data for May and China's official manufacturing and non-manufacturing PMIs for June. In Eurozone, preliminary CPI data for June are due out, while from the US we get personal income, personal spending, as well as the core PCE price index, all for May. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.